What's up? What's up? What a crazy day. But we talked about it this morning and said that this would be possibly the kind of day we would have. And if you look at it now, nothing. It doesn't show you the crazy action that we saw in the middle. So it's always interesting, and I'm sure, when you hear the reports, if you listen to them idiot media, you'll hear many things. But if you just look at it even on a 15-minute chart, look at this: the spike up, the spike down, and then a little bit of a rally. So I don't know. Listen, it was kind of as I thought, and what I said, it was kind of a nothing day. I mean, if you had the right positions on at the right time, it'd been okay. But really a big zero from an actual day of opportunity. Again, we don't talk about volume a lot, but lighter volume, which really probably indicates there's more retail involved than anything else right now. And this kind of reminds me, and we're long, we're net long. So, not that I'm thrilled with that, but again, I don't look at my positions based on what I think. I look at them what they tell me and based on the algorithm. But I think this is almost like the bond vigilantes. We talked about that for months, that they were waiting for their opportunity and they would eventually just come in and bury them. And that's what we saw. And I think similar in the equity market is you're seeing that they're kind of waiting, and the big money is kind of waiting to come in and hammer it. I mean, interest rates continue to rise, which is not necessarily good for equities. I think you probably need a 10-year around 3%, and that really has not much to do with the Federal Reserve. Okay, the Fed rate, the Fed funds rate is what the banks borrow off of. Okay, but that really does not have anything to do with what the individuals borrow off of. Okay, and obviously they check your credit, and you can get, if you have good credit, you can get better rates. But at the end of the day, okay, you're really looking at what will the market bear, and rates are higher. Okay, so banks are making more money, which they're happy about. But you'll get to a point where a lot of the money that is invested in these markets, okay, will want to go to fixed income, because there's a lot of money invested that doesn't want to be in, but they have to chase yield. Okay, so again, it's an interesting picture. And I'm not predicting anything. I'm just making an observation of what I see in the market overall. Okay, so this is not, any prediction. It's just, this is what I see. But again, my positions. I just go, what's up? I just close them every day on the update. So it's not like I'm doing something different. I'm telling you one thing and doing something different. But to me, it looks kind of swarmy here. So we'll see. We'll see where it takes us. But again, you had some pretty good whip. The Nasdaq, I would think, probably the biggest, right? I mean, the Nasdaq was up very nicely and sharply, and then it collapsed. It was down. First of all, it was down most of the day, or flat, and then it went bonkers. Okay, and came back down. So look, at the end of the day, it made a new intraday low. So again, we'll see. I mean, there's no automatic knowing where this is going to go from here. But from my view, it looks weak. Okay, from my view, it looks like it could be trouble coming. Again, that doesn't mean it's coming tomorrow. Okay, and again, it doesn't mean that we won't be positioned correctly by the time it happens. Okay, so it just, again, it's an observation of where we stand, and certainly we could see a big rally tomorrow. It's hard to, when you have a market that is really this quiet and this slow, which it is, it's hard to get a grasp because it takes much less volume to move it off center base. Okay. And that's another issue to look at, is it takes a lot less to make a market move in a direction of price. Okay. So I think that, again, you have to play it as you see it. And depending on the time frame that you're trading, somebody asked me what moving averages do you use? I said, well, first of all, I don't use moving averages, but that also, everything ties back to your time frame horizon. Okay. No matter what you're using, it has to be measured against the time frame that you are trading. Okay. Other than that, it means nothing. Okay. Because, you can make a case, you can look at a chart that will justify your opinion, but is at the time frame that you're trading. And I think that's what people often make the mistake, trying to prove themselves correct. So I'll find a chart that says it's bullish. Okay. And, I don't know if I can find one, but, let's just look for a minute. I doubt I can find one, but, but I can find something that could confirm my opinion by changing. So again, I think that's important to understand, that the price action will tell you what's happening, and that price action that you're using has got to be based on the time frame that you are using as your trading time frame. So when you're investing, you're certainly not actively trading. That's a longer term frame versus if you're trying to actively trade. And if you're actively trading, then you're using much shorter time frames because you want to create the most amount of trades possible. Okay. So this is always what it comes down to for every individual, is what are you trying to accomplish? What are you looking at? And then you can base it on those time frames that you watch. Okay. But don't mix the time frames, because what you're going to find is that you can be in an uptrend on a 1 minute chart and a downtrend on a 10-minute chart. Okay. Just remember that when we talk about, we call it universal price, all charts are the same, all patterns repeat themselves, and the shortest time frame always has to be that will always resolve itself into, what do you say, Guitar Boy? It will always resolve itself into the longer term time frame, okay, which is what you're watching if you're looking for actual direction. Okay. And that again becomes an important point that most don't think about, most don't care. But if you're going to be successful, depending on the frame that you're going, the timing you're in a trade, you have to be looking at that time. Okay, that's the time frame that is going to determine whether you're long or short, or whether you should be exiting or whatever. And we trade in the mornings. When I trade live futures with everybody, we trade 4 minutes. Okay, and we use a 1 minute to guide us on what to do once we get in a trade. So again, I think it's important for you to understand that markets are markets, and they're all the same, and they're all going to trade. It's just everything comes back down to where are you trading at? What do you say, John? Joe, how are you? Okay, so everything comes back to the same thing. It always reverts into, what are you trying to do? What is the time frame? And that's it. It's that simple. Okay. Now again, it doesn't mean that the profits come that simple. It doesn't mean that it's that easy to make money every day, because it's not. But again, everything has to be consistent with the way that you're looking at it. Okay. Too many people try to curve fit their opinion, and they'll find a chart or a pattern that backs their opinion, which is wrong, which is a sure lesson in how to lose money. Okay. That is a sure lesson in how to get bust. Okay. By trying to create something out of nothing, something that does not exist. Okay. What's up there, Mr. Hecht? How are you?
Hello, how are you?
I'm good. How are you?
Good.
So what's your take on the action? Pretty crazy today, but pretty quiet.
Yeah, quiet. Mostly quiet. I mean, these markets are trying to find direction. Um, looking at the commodities, it seems like gold, Bitcoin, everything is back in bullish mode. Beans, grains, I mean, my take is geopolitics are going to be big this year. And I think that the Winter Olympics we're going to remember as a very important kind of event, not because of any of the athletic contests, but because of the kind of agreement between Putin and Xi, that to basically do as they please.
Right. Well, again, that's what you end up with when you give up all of your power and you give up every possible chip that you have, and you just throw it in. You end up with that, and that is, of course, what we've been concerned about for months, as we could see this all happening well ahead of time. And of course, the grains, as you mentioned, are exploding to the upside. Not a surprise. I mean, listen, inflation attacks everywhere. Okay. Of course, I think we have CPI this week too, and it'll be some bullshit number that is well below what is actually happening. Would you agree with that, sir?
Yeah, I think they're expecting 7.3% for January, which is still, the highest level in 4 decades, but it's probably about half of what it actually is.
I say you multiply their number by 3. I mean, that's what it looks like to me. I was, one of our guys is from Texas, and he showed me he paid $1.48 for gas last year or so, or 14 months ago. And now he's paying over $3. Okay.
Yep. And the housing stuff is still insane. I don't know what's going on in Chicago, but I will tell you, one house came for sale on my block this weekend. They had an open house on Saturday, and I'm not exaggerating. There were 30 cars. You know my block, right?
Right.
There were 30 cars in front of the block, and there was a line to get in the house.
Right. It's amazing.
And by the way, I would say 75 or 80% of the cars are California plates.
Oh yeah. Well, they're listen. They want to come because, again, they want the tax break, and it's actually close enough for them, and especially depending on what they do for work, for them to be there the 6 months in a day.
Yep.
But in Chicago, I mean, obviously, my house I can't sell. Okay, I mean, I've got it's kind of sold, but there's a couple of issues which I told them to go scratch. That I'm not, I'm not giving them that reduction that they want. So right now, but we've tried to buy 3 or 4 houses for Xander, and every house that is under 500,000 goes for over list. Okay. And I can't get anywhere near what I have in my house, which is obviously over 500,000. So the lesser expensive, the lesser priced homes are flying off the shelves. We went and looked at a house. Xander and I looked at a house a week ago. There was 30 cars out there, and they had 20 offers. Okay. And they wanted my offer, but I refused to go higher. I was already slightly over, which how that would kill me to be over list. Okay. And I'd given the broker an escalation clause to X amount. And they got to there and they said, well, if you'll come up, I said, nope, I am coming up 1 dime. You want somebody else? Go get it. I'm done. Okay. So I don't know. It's a crazy world out there. And, obviously, go ahead. Sorry.
I mean, it's really crazy. It's we have a nice block, nice houses, but 30 cars on the first day of an open house. It's like I couldn't even drive past there. It was ridiculous.
Everybody wants homes. I mean, it's amazing what we are watching and what we are witnessing. But this is not any different. Again, I can go back to 2008 and talk about similar types of stories. I can go back to the internet bubble and talk about similar types of stories. I mean, this is driven by the imbeciles at the Federal Reserve.
Okay? Absolutely. And now they're trying to put more imbeciles on.
I know. Isn't that amazing?
A new breed of imbecile,
The whole,
new and improved imbecile.
well, we won't say improve. We would just say bigger idiots. I mean, this is a crime. What's going on in this country right now? Because again, you know who's going to end up holding this.
In my neighborhood in New York,
Yeah,
in Westchester, I saw that that a bunch of people break into Louis Vuitton and steal a bunch of handbags out, and they had security guards there. I saw the video of it. They just stood there and watched them.
it probably helped them load up. I mean, it's a crime when you think about it of just what's going on, because it's sad that we are in this position. And once again, you know who's going to get screwed, right?
Oh,
The middle class, the little guys are going to get screwed again. This will be just another beating. In fact, before you got here, I said, you know, to me, this market looks very similar to the bond market. And you and I said for months that the bond vigilantes were going to eventually come over and take charge and clobber the market. And of course they have. And
and it's sitting right near this 152.28 level.
Right.
On the long-term chart is a gateway to 136, I think.
And again, to me, the equity markets look very similar to that. They're very thin, lightly traded compared to where they should be. And to me, that's more retail trade pushing and trying to, you know, either get in because they weren't in or add on, whatever they're doing. And I think that eventually the pros and the big firms are waiting for opportunities to clobber them. But I could be wrong. I mean, that's just that's how I see it.
Yes, White Plains, just to answer that question. But the other thing is that, you know, with the stocks and everything, that employment report last week, expect a big revision down.
Right. That was as big a bullshit number as there is.
Yeah, expect a big revision down there.
The January number is always big to begin with. Okay. And, you know, again, remember that they don't count. Okay. They don't count people who have quit looking for work. Okay. They don't count either. So it's a screwed up number, but January, there's always some major additions into the payroll anyways. And of course, you'll see, I wouldn't be surprised if it be a revision of 60 or 70%. What say you?
Yeah, absolutely. I thought it was a bull number.
Yeah.
I didn't think it was, I thought it was ridiculous, actually.
No, I mean, again, it was almost laughable. So you got any bitches today, young man?
No, I guess my real bitch is what I said. Sorry, I'm chewing on something, bro.
All right. Well, you can chew, I can talk.
My real bitch is that I cannot believe, well, I can believe, but I cannot believe that we're going to allow the Russians and the Chinese to dictate the world order. And we're going to sit back and we're going to worry about nothing.
Right. Right.
What are we worried about? We're worried about, you know, any other president, you know, the way they're conducting diplomacy, it seems like diplomacy is all taking place away from the United States. We're not even involved. It's unbelievable to me.
Well, we are the new joke right now. I mean, you know, we're laughable at what we're doing and what's going on. I mean, that is evident. Because again, I mean, where else could you see Russia and China grab this much and throw in Saudi Arabia, who said, yeah, we'll give you more oil. And you saw a quick, maybe $1.50 down and straight up. Okay. Because again, why would they give you more now? Because we're coming into the demand season. That's why they give you more now.
Why that dip when Biden signs an executive order to release more SPR oil, and it's
right. So he can give it to China and India like he did last time.
It's coming. You know, I mean, I think. Listen, what was oil down? $1 today?
71 cents. Yeah.
Gasoline was higher.
I know.
Yeah. I mean, that's telling you all you need to know here. Look at soybeans. Right. They're flirting with $16. Corn is, you know, sitting at 6.30. Wheat's going to get back up above $8 here, it feels like. You know, everything. And I do think, I don't know what the algorithm says because I haven't looked at it today, but I will tell you, I do think gold has a real chance of popping here.
It popping?
Yeah, popping.
Well, I mean, we're short at the moment, but I wouldn't be surprised. I mean, this rally today, was again, the follow through from 1800, okay, was pretty reasonable, right? I mean,
Yeah.
again, that's what you were watching for, and here you are starting to trend higher in a pretty good looking pattern now from the bottom.
I like the action though.
What's that, babe?
I like the action.
Right, and I wouldn't be surprised either. I mean, again, this is
cryptos are doing. We said last week, hey, we kind of liked the way they were sitting there forming a bottom. I know we were still short them, but it was looking interesting. And you get through 50,000, you could have another explosive move here. And I know 50,000 is a far away, but it ain't that far.
No, it isn't.
This thing.
I mean, it's right next door. We were just at 32,000. Now we're at 44.
Right.
And we are long it now. So, we got long this morning, when they were much lower than they are now. But, I mean, it's not a surprise. And, I think that there's a lot of bad stuff happening. And I think that there's going to be a bigger demand in that space. There's a question.
I'll tell you something really interesting that I see.
Yeah.
With interest rates going higher, the bond market going down, we know the Fed's going to start jacking up interest rates. The dollar index is very weak. It's very weak. It should be much higher. And I think that that's really reflecting the fact that China and Russia are like the guys who went into the Louis Vuitton to grab whatever they could. I think that that's what we're going to see here. They know they have a very limited window, which is probably until the midterm elections to do whatever they have to do. And I wouldn't be surprised to see, that going on, soon. And to answer this question, why is natural gas dropping? Because it's a head spinning commodity, because it went up because of the cold weather in Chicago and in New York and, East Coast, Midwest. And now they're selling it because there's still a lot of natural gas in this country, but expect natural gas is going to make higher lows. We're not going back to that June 2020 low, but we're going to see wild price swings in natural gas. That's a crazy market. I'm just trying to answer the question that's in the.
No, I was gonna bring it up, and I think that, again, to talk about on your point, and the other thing is we are coming out of winter, okay, and the weather has been mild again. We had that spike up when there was all those talk about storms and everything else going on. And again, it's a wild, crazy market to begin with, which again makes it a bigger challenge. So it's not.
You're coming in, you're in the middle of February, basically, in the natural gas market, and the contract is March, which is the end of the withdrawal season, and you're over $4. So it might have dropped because from crazy levels, but it's still up there. And could it go down to 3.5? It absolutely can. This is a market that, you need discipline in. This is a market that carries out more people, than any other market. So this is a market you have to approach, not like an investor, like a trader. You have to have discipline. You have to have a plan. And if you don't have a plan, you should stay away from it.
Right.
Don't invest in this market. Listen, I have no problem investing in some energy companies here. I still really like the whole energy sector, because I think that now you basically have a bit of a monopoly, because who's in their crazy mind is going to go into this energy business in this world, so they're going to all benefit from the higher prices. So I think you're better off playing it with that. But if you want to trade natural gas, which has a lot of potential for rewards, it's got a lot of potential for risk too. So you got to have a plan, and you got to stick to that plan.
Right. No, you're right. I mean, listen, it's a wild market, and it's like the Wild West, and you have to be prepared for.
Anyone who told me that they're a scale down buyer of natural gas or a scale up seller of natural gas, That's like signing your own death warrant.
They're a scale. They're getting a bigger following behind their
The only time I'm a
funeral.
scale down buyer of natural gas is when I'm short, and the only time I'm a scale up seller is when I'm long to take profit.
Right.
I pick a level and I put the risk reward around it, and then I use trailing whatever. That's how I trade that. And
Right.
I love it because it's volatile, but I'm never smarter than that market. If you catch
It's a challenge, man. Listen, we've got, listen, there's reasons for everything, and price will always dictate, and the price action will dictate. And we've got a ton of crap going on. And of course, oil at 91.58 after being down today. I mean, I don't know. I would say 100 could be here next week, if not sooner.
Yeah, I agree. And with natural gas, realize this, hey, Russia and Ukraine and all this stuff. But over the weekend, Russia agreed to sell China and Asia huge amounts of natural gas via the pipeline. And, the Biden administration has been twisting U.S. LNG shippers to divert LNG from Asia to Europe. And that might have caused a little bit of the squeeze. But now with Russia selling it into Asia, they can divert. So it's actually not that bullish for the price right now. Now, if war breaks out there, it's a different story.
No, I mean, again, I don't think there'll be a war. I really don't think anything's going to happen. That's my opinion.
I think he's going to quietly control Ukraine, and the Chinese will quietly control Taiwan.
Right.
Will do nothing.
Right. I agree. Again, look, at the end of the day, all of our problems could be solved in 5 minutes, but we're not going to solve them. That's it.
Just start fracking and drilling.
Well, that's it. I mean, look, again, that is the biggest cause of our massive inflation. That's the biggest cause of the problem with the supply chain. That's the biggest cause of every problem.
Yeah.
Okay. So, you get oil back, you get the price of the pump down to a reasonable level, and you get people paying reasonable heating bills, and you wouldn't have this massive inflation. But again,
what I would do is I would take Biden and I'd stick him in a chair on Pennsylvania Avenue, and I'd give him a yellow pad and a pen, and I'd say, do me a favor, for the next 3 hours, count how many cars go by and count how many are EVs and how many are gasoline powered.
You might get zero in 3 hours.
And then dictate your energy policy based on what you see. And I will tell you, 97% of the cars will be gasoline powered.
Of course, 90, maybe 99. Look, I don't see many EVs running around.
I see a lot of them here, but
I mean, but what percent would you say are there?
I would say here, I would say 99, between 95 and 97% of the cars gasoline powered.
Right. Okay. So there's lots in New York City. What percentage do you think are in New York City? Okay. Again, this is the point. Again, I ask this question every week. At what cost do you want to create this environment that you can't create anyways? It's a waste of time because you couldn't do anything for 10 years anyways. Not that you're not going to try to do that. I have no problem with that. But to shut it off and shut it down in 5 minutes, okay, is stupid. Okay, it's beyond ignorant the way they handle this whole thing. But of course, this is common for this administration, and it was common for when they shut down the coal mines. They did the same thing.
That's the way socialism operates.
Right, I understand. I get it. So, anyways, I don't know. I mean, look, we'll see. It's quiet markets, which indicate something bigger is happening. I think that you've got some issues, and we'll look at these charts. And you mentioned it, the dollar. Okay, is weak. Okay, and we're short dollars. Look, we both know, the central banks around the world spend time screwing their own currency, and it never retraces back, and it always has less value. I mean, so they can spend more money and create a bigger mess for everybody else, right? I mean, is that am I incorrect in that?
I think the dollar index, which made a new high in January, I think it reflects the U.S. weakness. I think that's what it is. I think that it reflects what's going on with China and Russia here.
Okay, all right. So in the meantime, we're short, and I would say that, net, I mean, the dollar, 96 on the upper end and 95. I mean, it's a big range, and it typically doesn't trade that wide, but you could see more volatility here as well. I mean, there's a lot of stuff going on, and I think you just have to be wary. But right now, certainly the bias is to the downside. Okay. And the euro currency, obviously, the euro currency's bias is to the upside. And of course, we're long the euro currency, and we're coming up to some resistance in the euro currency. And look, I would say that your support is probably 114. Okay. And again, I still personally believe this is going below par at some point, but that doesn't mean tomorrow. Remember, when I giving you an opinion, it's just an opinion. It has no trading value whatsoever. Okay. It's just what I think of it and how I look at it. And I've said that since it was $1.60 that I thought it was going there. Now, right now in the short run, it's running higher. Now, again, 114.75 is probably going to be some resistance, but don't be surprised if when we get here next Monday, it's at 115. I warned everybody that this thing can, when it decides to move, I mean, it moves fairly actively every day, but it can move a penny or two in a day without a problem. What do you think?
Yeah.
Okay.
Yeah, absolutely. Absolutely. But if there is if the Russians do go into Ukraine, expect the euro currency to come lower.
I would agree. I mean, again, listen, I don't think they're going in, but you mean, do I think 5% interest rates? Is that your question?
Who, me?
No, I think I erased it already. But I think somebody asked about if we're going to get the 5%. I'll get there. Don't worry, Ash. Relax, buddy. When I get there, I'll get there. Okay.
5% interest rates was still in negative territory.
Right. I'm going in alphabetical order, so I'm still in the numbers. I got to get to the letters pretty soon. Okay, I'll get there. Keep your pants on. Relax. I know you want to go to bed. It's late for you, but just chill. Okay. 114 to 114.75. Okay, for Connie and Bitcoin. Well, again, I said last week it looked like it might be making a bottom. Again, I'm not taking credit for like the big rally. I mean, it just looked like it could be bottoming a little bit, and you might see a bounce. So now we got a bounce. So where do we go from here? Well, we're long now. Okay, and where do we go from here? Well, I don't know. I mean, the next logical resistance is about 46,000. Okay, and after that is over 50. And it won't take much. Remember, if you've watched this thing move, okay, it moved last week between Friday and today. It's only moved 8,000 points or 8,000, whatever you want to call it. Okay, so not going to be a surprise if you see some dramatic movement. Okay, it's a very wild trading vehicle that trades, other than on the exchanges, it trades 24 hours a day, 7 days a week. Okay. So, for my money, if I'm looking at this, I'm saying, okay, right now, I think it's probably 38,000 to 48,000. Okay. And that's what I'd be watching. Okay.
Yeah. The next big level is the 50% retracement point, which is about 51.
Well, there you go. Okay. And
that's what they're gunning for. You get through there, I think you go to 70.
Right. I mean, look, would it be, let me ask you a question. Would it surprise you if it hits 100,000 this year?
No. Well, I would be surprised if it didn't. How's that?
I agree with you. I mean, again, I think it's real. And I think it, like I say every week, and just to be clear, okay, I have a position in cryptos and the whatever they call those the other markets. But the position I have, if they all go to zero tomorrow, I'm not going to cry. I know what I'm risking. I understand it, but I'm also looking for a home run. Okay. And if I'm right, I get lucky. And if not, then I'll lose. It'll be a bad investment. It won't be the first one, I promise. Okay. But don't invest more. You trade them on the exchange, fine. Okay. Trade them back and forth. But if you're buying them in your wallet or whatever, again, I'm not sure of all the technology and terminology, but if you're buying them, just be prepared that they could go to zero. You've got the SEC getting involved and going to declare some securities that will be unregistered, which makes it a problem. But I think, as you and I have said, Andy, I think for the whole time, we're going to see, when it's all said and done, there'll be somewhere under 50 that will be legitimate.
Right.
Okay. And maybe less than that.
17,400 today.
How many?
17,400.
I mean, when we first started talking about it, it was like 12,000 here.
Yes.
This just tells you how many criminals are out there. Okay. So in the meantime, cocoa, has had a nice rally.
Metaverse tokens coming up.
I'm sorry, what, babe?
A lot of metaverse tokens.
Yeah. I mean, cocoa is higher, it's lower today, but we're long and it has had a nice rally. And again, it was the weaker of the bunch last year of the soft commodities, and it looks like it may be the stronger.
Yeah. If it's going to fail, it'll probably fail around here. But if it gets through this area, this is a big area for it. If it could get up to like 27, 2,800, it could really roar.
Buy lots of chocolate.
Also, it's a funny market. It always seems what's a week from today is Valentine's Day. It's it's kind of people buy these things around these dates. So just be careful for the next week in cocoa.
Right. Exactly. So, and of course, crude oil. Okay. Again, it keeps going up. Look at that. Look at it. It refuses to break that line. And I think if I looked on a weekly, I think it's up 10 or 12 weeks in a row now. Okay.
If it closes above $75, it's the 8th consecutive quarterly gain. 8th quarterly gain.
We're up 7 weeks in a row and 8 out of 10 or 8 out of 9. Okay. So again, what you want to fight that market? It continues to go higher and repeating the same pattern. Will there be a knockdown at some point? Of course there will. But at the end of the day, again, I would not surprise myself nor Andy if we see the all-time new highs come into play at some point.
Yes, 147 and change.
Okay. So remember that, again, this is a product that is used and we have no control of it anymore.
My experience with the oil market is that when it reaches these big numbers, people tend to say, "Oh, we got to the triple digit oil. This is a spot to pick a top," and they get obliterated. Just be careful.
Yeah, picking tops and picking bottom.
It's one thing to take a profit. Yeah, I'm never against taking profits. I mean, I like to ride the trends, and I trade with Bubba. I know we want to be on the trend. We want to take the meat out of the move, but establishing a new position at a big number like that, I have seen more people get carried out than you can imagine.
Right. Exactly. Okay. Anyways, 90 is solid support. And again, look, I'm not a seller at any price right now, on a long-term basis. I mean, during the day, I could be short at any given time. But, right now, 90 to 93. But I'm saying I think it's going to 100 and probably by next week.
I'll tell you, the higher it goes, the more the chance that the elevator is going to take it down. And it will drop 10, 15 bucks. Easy. Right. But you know what? I say that'll be a buying opportunity.
I agree. I think that, again, right now.
Just don't buy it while it's a falling knife. Wait till it settles. It gives you plenty of time. Look at all the time you had back in early December. Look at all the time you had.
100%.
To establish a bottom, for it to do its thing. If you bought it in mid-November, you got clocked. You got to let these things play out.
100% correct. I mean, if you wait, what's the worst that can happen? You pay a little bit more if you're waiting for the right opportunity, right, or you miss it. Again, you'll get another opportunity.
Oil, unless, the last time I saw a real spike in oil where you would have missed it was back when Saddam Hussein went into Kuwait. I mean, these are geopolitical issues, Right. So you're not going to miss it. Don't be afraid of missing it.
Right. Exactly. No FOMO. Anyways, 90 to 93, Ash. Okay. Cotton. I mean, this is almost perfect. Resting, made new highs. Now it's just resting again. It's in consolidation. And more than likely, it will break to the upside again. We're still long.
Yeah, more than likely, you're going to see them test and go above the 130 level. I mean, that's just the way it is.
I mean, look at that. You have, again, remember that every price gets affected by inflation, not just gas, Okay. And remember that gas and oil are affecting all these prices as well because they're used in everything. Okay. So anyways, I mean, 124 would be about the lowest I would think it would get to. And I think you got, again, the highs right now at 128. But again, I wouldn't be surprised to see 130. And I'm not a seller at any price right now.
You can't be.
And I don't day trade this either.
No, you can't do that. This is not a very liquid market.
No,
Yeah.
not at all. And of course, gold, which we talked about a little bit earlier, but now we'll give you some levels as well. But again, gold came off the 18, it went below 18 to 1780, which is our support level, came back, hovered around 1800, went through it, and then closed above it on Friday, and bang, here we are again.
So can we pull this chart back to like August 2020?
Yeah.
Right. So the interesting thing here for me is the wedge pattern that's developed. So you have lower highs, but since last March, almost a year, you've had higher lows. And this narrowing wedge pattern is telling us that the odds of a break higher or lower are rising. And when you have the same pattern in silver, we'll show you when we get to that chart. The bottom line, listen, it could go either way, but based on what we're seeing and based on the really long-term trend, I say the odds favor a break. When the break comes, the break could be a lot higher.
We're short, by the way, just to answer the question. We are short. We'll probably be long tomorrow, but I don't know that yet. But we are short at the moment.
Right. No. And I'm saying, listen, if I follow the trends, I get it. And
I know you do. I mean, I'm just somebody asked the question.
We're short because every time we've been, above the 1820 level, it's been like back to 1800 like a magnet. And there's no reason why gold can't make another higher low and then stop. And then it's just what it's doing. These things can go on for a long time. But I will tell you, it's like a tightly coiled spring, this chart.
Right, which we show often on other charts, which we always invariably get a big move. And that's, again, what Andy's saying, is that there's a big move coming here. And right now, we're looking for a down. But, again, tomorrow morning, I may be sending out an update that we're long or that we're going to reverse. But right now, again, at this moment, we're still short. And at this moment, the levels to me are still 1780 to 1840, 1820. We're just through 1820, so 1840. Okay. And, we'll see where we go from here, but it is coiling, okay, or compressing. And I'd love just to compare that to when you were a kid, you had a balsa wood airplane that you kept winding that rubber band so it would fly farther, and then it snapped. Well, that's what's going to happen here. This market is going to snap one way or the other, and it's not going to be $20. It's going to be 100 one way or the other.
Or more.
Whatever number it's going to be.
It's going to happen. But this, as we said, this can go on for a long time. I was going to say, and watch the gold. Take your technical clues from gold, because gold trades technically better than silver. Silver is full of head fakes. Silver is the natural gas of precious metal. Would you agree with that?
Yeah, I agree with you 100%. And feeder cattle, okay, look, feeders we're lower today. Well, listen, there's a perfectly logical explanation, okay, which I will give, and then there's one that everybody else is giving. The logical explanation is it just came off of new highs, okay, and you're getting a little bit of a pullback. I mean, we're long, okay, and I would expect a pullback.
And corn was up.
And well, and that would be the explanation you'll get on all the TVs that cover corn.
That also feeds into it.
I understand, but I mean, it's really if we weren't at new highs, I mean, corn was higher when we were going higher and making these highs. We're still much higher, and so again, I'm not saying that it doesn't have some effect, but remember that correlations only play when over time, not on any one given day. Okay. And this happened to set up to be a natural day to sell after it made new highs on Thursday and had a little bit of pressure on Friday because corn got clocked early on Friday. Right. But yet here we are. Okay.
And in the meantime, the meats have been very strong throughout the off season. They've been very strong, and the markets don't go in straight lines. Corrections are a part of it. So you're right. It gets up to a high, it gets up near the highs. Of course, there's a little bit of selling.
I would say to watch the 164 level, but again, major support at 160, major resistance at 168. Okay. And the hog market, which you and I commented way back when, and actually I'm going to pull up the other chart for this because
Yeah, go for April. April.
exactly.
Over a buck.
Okay, exactly. Hold on. But yes, I mean April hogs. Okay, this is still February, but I'm going to put up April right now. Okay, this is a market that you and I commented that we could not believe the price of December. Okay, it was the highest we'd seen in a long time. Well, look what's happening. Okay, going into season, you're getting a straight up move here. We're long anyways, but the point is that this is the backup protein if the beef gets too expensive. And again, a lot depends on the cost of oil. Everything relies on everything else. And when it comes to people shopping, okay, it comes to, am I going to pay, X for beef, or I need to cut my budget a little bit, so I'm going to buy hogs. And
the tragedy is that the U.S. hog market and the largest producer and packager of hogs in the United States is Smithfield Foods, owned by the Chinese.
Yes.
That's a tragedy.
Yes.
Right.
100%. And again, remember, the supply chain issues have a major effect on getting these to market, which is also causing some of the prices. Okay. And that's if you can get them when you get to the store. Okay. And fat cattle. Okay. Hold on. Actually, since I said I'll go to it again, continues to go higher. It's breaking out. Okay. That's live cattle. Again, new highs again before pulling back a little bit late in the day. Okay. But again, you're going higher. And, we're getting to a point where
it costs more to do everything. So why shouldn't it cost more to eat?
Right. And we're coming to a point that, we're getting a little bit pricey. Okay. And there's an old saying in the commodity market, Andy, right? High prices will cure high prices. Okay. Now, I don't know if we're at that point yet.
But that's also, that goes as long as currencies are not being evaporated because of inflation. So
right.
That's, it's all a question of what is really a high price. You know what I mean?
I'm with you.
When one goes by itself. And the other thing, Bubba, is, when we get to the beans, the soybean meal, the crush spreads have been very bid here. And with beans almost $16, to still have the crush fairly bid means that the demand for the animal feeds are going up, the prices are going up, so they got to get more. These hog and cattle prices have to rally because the feed prices are rallying.
Disgusting. Yes, you're correct. Unfortunately, you are correct. Copper remains, and you can start to compare copper to gold in the fact that the pattern continues to compress into tighter ranges.
Right, and sitting right at the midpoint between the May high and the August low, sitting right smack at the midpoint.
Right. So, I mean, we're short, and right now I'd say 430 to 460ish, but I mean, it could see $4 or $5 in a heartbeat, either side.
Yes,
okay.
absolutely.
And the longer it struggles in this tight range, the bigger the move is going to be.
Yes.
Coffee. It got killed today. It's down 20 cents. Okay. I mean, look, we're up near the highs. We came off the support level again and are moving higher once again. And of course, we're long coffee. And again, I think we both expect still a run at $3, right?
Oh yeah.
And the run to 3. Okay. Again, that's going to cost you a lot more when you get your coffee. And of course, those mothers don't ever come down, they just go up. But again, it looks very strong and very powerful. Lumber's in a new age now. It's either down limit or up limit every day, and they go home. They must have a golf day.
Which means that it's impossible to trade this thing.
They must have a golf game to get to or something, because every day for the last 7 days, almost 10 days, we've either been down limit or up limit.
And you have to realize that, when you dip your toe in lumber, you're on the wrong side. You can't get out.
If you trade lumber, you should go have your head examined.
Right. You can't get out.
Well, I bet they didn't trade 100 contracts.
Limit up means there's no offers, and down means there's no bids.
91 contracts today.
Right. Exactly. Limit up, no offers. So if you're short, you can't get out. Limit down, no bids. You're long, you can't get out. And you know what that tells you? Don't ever trade that market.
If you get in that market again, you should be ashamed of yourself. Very much like the
Get
doctor.
what you deserve, right?
What's that, babe?
I said you get what you deserve if you go.
100%.
Now, natural gas is different because that doesn't have the same limit kind of moves that lumber has. But again, a plan. You must have a plan because if you violate that plan, you're going to do an amaranth. You're going to lose a lot.
Right. Now, to me, I would suspect that we'll be reversing tomorrow. I don't know that yet, but again, my guess is we would. Again, we peaked, okay, and we actually peaked at lower highs if you look at it, okay, because when you come down the overall pattern. So we'll see. Again,
it's such a confusing market, Bubba, because if you put up the continuous contract, you went up to 7 over 7.
Right. Well, that was an expiration date, very similar to what happened in crude.
They draw chart points. This is like silver. It violates technical levels left, right, and center. But we trade trends because there's a lot of meat when they move big time.
Right. Here's the continuous chart you just asked about. Hold on. There's a continuous chart. Okay. Going back and hold on. I know you want to see that spike you talked about. Oops, I don't want it 1 minute though. I probably want a 1 year would be more likely. Okay, there you go. There's the spike. And of course, look, you're going to see that these are pretty wild markets. This is a market that took out a couple of firms because they were short and trying to get cute and they got trapped, which is again always going to happen. In the meantime, if I'm looking at levels, obviously I don't know where we're going to be positioned right now. We're long, so I'd be looking at the 420. Okay, to me it'd be 420 to $5, but I got a feeling we're not going to be long. So I don't want anybody to act. I will tell you if I think there's something that could be possible. So don't be so willing to act. And no matter, even if I give you levels on anything, okay, you better look at the chart yourself when it gets there, because all patterns are not created equal at the time they reach a major point. Okay, so you have to understand what you're looking at when it gets there. OJ, we got short last week and it continues to get pounded, which again, not a surprise. Okay, everything is okay in Brazil now.
It's not even Brazil. It got cold in Florida, and they rallied it on that. They rallied it on Florida. I mean, I know I spoke to my folks. It was in the 40s. They rallied it, and that ends quick down there. Today it's 81 degrees. They sell it like nobody's business. 137.50. Still, it could have room downside. We're long. We're short it. The bottom line is another crazy commodity. It's in the cotton. It's like slightly more. It's a lot more liquid than lumber, but it's like cotton. It's not one of the most liquid. It's not oil or gold.
Right. Which is why we don't trade actively.
The less liquid, the more magnified moves higher and lower. That's what happens.
Correcto. Platinum, look, it's kind of stuck. It again, just like gold, just like copper, this is compressing into a very tight range all of a sudden, which will indeed make a much bigger move. Okay. And now, platinum was lower today, while gold and silver were higher today. But again, this has done a very good job of holding 1,000. Now, is it going to hold forever? I don't know. I have no idea. Okay, but we would be short if we were trading it, but it is not liquid enough to trade, so we don't trade it.
It's a horrible, horrible market. I mean, it just fails all the time. It's for years.
And of course, sugar, which we are short, and we're coming down. There's pretty key levels down here around the 1750, 1780.
1760 is key.
What was that, babe?
1760 is key.
Okay, there you go. That's a level that Andy's talking about. All right, so this showed it did bounce from here, and we'll see. But again, it's been heading lower. And again, if you look at it again, just look at the scope. The scope should continue to take in this direction until it doesn't. But for now, this is a very solid trending time frame. It's not too steep. Okay, so a rally up to here would not be a surprise, and it could stay down here. And this line is going to, if you draw it into infinity, it's going at this direction. So as long as it stays below there, it ain't going higher. Okay, And 1760 is Andy's scale, but I look at it from 1780 and I see, 1840, 1850. Okay. And your wild commodity, this is a very big day today that it got over 23. Now, in my eyes, the key, and we're still short silver, but in my eyes, the key here is going to be the hold of 23. I thought that was a key number to begin with, and it's got to hold here or it's going back down again. And again, I don't know if it will or it won't. And I don't know if we're going to reverse or not. This is not as clean nor clear as gold is in my eyes as to where it's going. What do you think?
No, it's tough. I mean, listen, silver's the one. It's head spinning. Technical levels sometimes don't mean a hell of a lot. Look, last year it went from 19, not last year, in 2020, it blew through every technical level on the downside. Looked like it was going to zero. It went to $11. And then all of a sudden it was $29. So this is a wild one. I like to look at gold technicals.
Right.
In terms of silver, I'm more comfortable that gold trades technically better. So if silver is showing something, I need to see validation from gold. That's how I like to look at it.
I agree with you. Anyways, 2250 to 2350 would be the levels to watch. And the bond markets are getting zapped, which Andy said.
I hate, Bubba. I hate this. Unless we get a big washout in the stock market, which I know you're looking for, unless we get that, stocks that are in here, this thing goes through that 152.28 level. It opens up a lot of downside in this bond market, and we know interest rates are going higher, and more than that, we know they have to go a lot higher. So I hate this bond market.
I don't blame you. I mean, we're short, and I would say 154 would be a spot to sell. Okay. And, there is no spot to buy, but I would suspect you might find some support at 152.28, which was Andy's number he called. But then below there, I mean, it's basically look out below.
Yeah, there's a little bit of support at 144, but it's really 136 is the target. And
Right.
that's like a 2018 low.
Right. Well, remember, they thought they're in such good shape, they eliminated the 30-year bond for a while. Anyways, I got to give Connie exact levels. I just gave them to you, right? I gave you levels, right, honey? Corn, look, it had a little bit of a pullback. In the meantime,
by the way, one more thing about the bonds.
Yeah, sure.
If you're out there and you have a mortgage that's over 4%, I would say this, you're not going to get a lot of opportunities to refinance again.
That's right.
Right. That's my opinion.
I'm with you. Corn, it had a little bit of a bump. What's the big deal? Look, it held like a champion at 612, and here we're back up at 630. Okay. And going higher. I said today on RFD, I wouldn't be surprised to see a 7 handle in front of corn, maybe higher. And I wouldn't be surprised to see a 17 handle on soybeans. Look,
you know what I wrote on soybeans?
No.
Over the weekend, somewhere, I don't even remember where I wrote it for, but I wrote over the weekend that based on what I'm seeing in soybeans, I think the next time beans are out of the teens is on the upside.
I agree. Listen, again, we talk about all the things that cause these things. And of course, then you tie in some bad weather throughout the world and a lot of dryness, and all of a sudden, and then furthermore, with higher rates, is everybody going to be able to plant this year? Are they going to be able to plant at the capacity? There's a whole bunch of things that tie into.
And on top of that, like in copper, you have new demand verticals. For soybeans, you have biodiesel. For corn, you have ethanol. And those are growing. And the higher that oil and gasoline prices go, and heating oil and distillates go, the more you're going to divert these agricultural commodities to fuel.
Right. So again, I mean, if I were looking at levels, 612 to 640, but I'm not a seller. We're long.
And by the way, the higher petroleum prices also boost the fertilizer prices dramatically because they're petrochemicals.
Now, soybeans are going straight up there. This, I would not be surprised at a pullback. Okay. Again, I'm still very bullish, and I think they're going a lot higher. However, when you start to go up at this pace, the market cannot sustain.
Yeah, this is too steep, but you don't stand in front of a freight train.
No, but I think you've got WASD on Wednesday, right?
Yeah.
Okay, which could create a little bit of a pullback. but I think pullbacks are buying opportunities. And right now I'd be looking at about 15, 20, okay, as a potential spot to jump in. Again, I'm not selling it. We're long, okay? And wheat, okay, came off the bottoms. Okay, now we're still short wheat. It popped off the bottom. And again, if it gets through 780, 790, I'd be willing to look at it a little bit closer.
Yeah, that puppy feels like it's on a launch pad to me.
It could be. I don't have any doubt that it could go higher from here. You know, again, it may tie into many different things, but from here, I'm from looking at it straight from a technical view, I would say we're probably at 755 and 790 would be the levels I'd be watching.
One thing that could really get the wheat market going is consumer hedging coming in, because we're at a critical time now. You know, we're coming up to the spring, we're coming up to the planting season in Russia, Ukraine, the US, all over the big wheat producing countries, and Canada. And, you know, consumers are nervous, and consumers are nervous for geopolitical reasons. They're afraid of export bans from Russia and all this kind of stuff. So you might see a real flood of consumer. If Bubba's right, if this thing goes above the 780 level, the $8 level, expect the consumers to panic now.
Right. I agree. And
it can get real volatile.
And remember, I told you a couple of weeks ago, Andreas ammonia is up 400%. Yeah. Okay. Which is a planting component. Anyways, somebody asked about the DAX, which I will do in this part of the call real quick. The DAX.
Oh, the German index.
Yeah. Yep. We used to trade that, believe it or not. I mean, it looks pretty awful. Okay. I mean, you know, it is coming down to some support. I'm certainly not an anxious buyer of this, but I would be watching it somewhere here around, what, 15,000. But it doesn't look very good. Okay. I would be more inclined to want to sell rallies here. Okay. I don't trade it anymore. I used to trade it.
With the potential for a war in Europe brewing close to their border, I think you got to be real cautious.
Okay. And then somebody who asked me was not going to be here, but I'm going to give them those right now before we move on. And somebody want to know about drip. Okay. Which is usually in the later segment, but drip, the Delta Romeo India Papa. Okay. This looks awful. Please don't ask me about $4 stocks. Okay. Please. That's a waste of time. Those are penny stocks.
This is bearish oil and gas producers.
You want to trade $4 stocks. Don't ask me about them. Those are gamble stocks. Okay.
By the way, that's right in the neck of the woods for the 10-to-1 reverse split.
Right. Exactly.
And then by the way, in a couple of months, it might be right back down here.
Right.
I wouldn't short it because it's dangerous, but I'm just
right because the accelerant, pardon the pun, but the accelerant is a multiplier, which makes them go crazy. Right. And XOP, which is just a straight ETF on oil and gas, looks great. I mean, here we are coming up to a key point, and if you understand the cup and handle pattern, it looks like we've kind of formed the cup and handle in an uptrend, which is very bullish. Again, I wouldn't be surprised to see this go much higher.
Right, and don't forget about these stocks, Bubba, and everyone out there. You know, they didn't participate in the rally. They didn't participate in the rally over the last 2 years. So they got a lot of catching up to do. And if oil is going to continue to go higher, these companies are going to make money hand over fist. And at the end of the day, the earnings are going to translate to higher stock prices because people are looking for value.
All right. AAL soon to be a $4 stock. Let's see. Before we switch this recording over. There you go. You said 17, Captain. You got it. Okay. It looks awful. I'm saying 0. Okay. That's my take of it. In the meantime, let me stop this recording.
This administration will nationalize them.
They won't be in power when it happens. Thank God. Anyways, let me stop that recording and get the next one going. Listen to my girlfriend speak to me.
Captain will be a government employee.
What's up, everybody? Welcome aboard to the Monday Night Call. And of course, this has become the Monday Night Marathon. In fact, one time I might try to do it 24 hours of the Monday. But in the meantime, welcome aboard, everybody. And, here we go. And, I like this one here, Andy. Current federal law says you must know English to become a citizen. So why are foreign language ballots even printed? I mean, really? Come on. Anyways, I showed you guys this is last week. Okay. And again, we're long, so it's hard for me to say we're in a bear market, but I still think we are, or we're in the early stages. But you get the most vicious rallies out of them. Okay. That's what I think we just saw. Now we'll see. Again, the score will play out eventually, but that's what I think we saw throughout this recent rally. And I would be, if I had to bet which side we were going to, I would think it'd be lower. But again, I am long, so full disclosure. Okay. But in the meantime, as I always do, veterans, my heroes are those who risk their lives every day to protect our world and make it a better place. Police, firefighters, and members of the armed forces, and of course, veterans as well. But again, we can never thank you enough for what you do, and especially putting your life on the line for nothing, which is beyond comprehension. But we appreciate you, and I know Andy feels the same.
Absolutely.
And as I always give it what I'm thinking, and personal safety bubble after metaverse's dark side exposed. Okay. Now, of course, they got clobbered on earnings last week, but of course, there's also some things that kids can get to that they're not supposed to be able to get to in this metaverse. And I guess they found them, and it's becoming. But of course, they don't have any problem with that because nobody cares, because it's Facebook or Meta. But at the end of the day, this is another problem that we see that is coming out and coming through, and just another way to track where you are, what you're doing. And again, I'm so tired of giving up freedoms and having people track me. It is a joke. And of course, the Fed inflation rates in the credit markets. We got a disaster, kids. Look, I'm not talking about the stock market now. I'm talking about a Federal Reserve that is loaded with morons. Okay. I'm talking about credit markets that are going to explode with rates. Okay. And it's wonderful to be a banker that has no risk if they get clobbered. Okay. Because the Fed will come running and bail them out again. But the average businessman will get killed throughout all this, as they already are, because they continue to put them out of business. What do you say, sir?
The average businessman has another risk too, that someone's going to walk in and clean out their store and not get arrested for it. I mean, the whole situation goes hand in hand. I would add the Fed, inflation rates, credit markets, lawlessness, political divisiveness. It's a mess. It's a mess.
It is an unbelievable mess. And mortgage rates, as Andy said, leaped toward 4%, highest since October 2019.
Yeah, refinance, folks, because you know what? 4% is going to seem cheap.
Right. It is. Okay.
It is cheap. I told this story. I'll tell it again. When I bought my first house, and I think I paid 12 or 13% mortgage rate in the early to mid 80s. I remember my dad coming over, telling me, when he got home from Korea, he got a VA mortgage. It was like 4.5%. I was like, oh my God, I'd never see that in my lifetime. I'm telling you, 4% still low. It's still low.
Yeah, it's very cheap. And Ford shutters 8 factories due to persistent supply chain disruptions. Again, we continue to ignore this. Now, I'm going to give you a personal example. Amazon, I'm now at 3 products that they can't deliver, that they always deliver the next day. Now they're telling me they're delayed. Now, you may not think it's a problem, but when you go to your grocery store, when you go to the Walmart, see how many empty shelves you have now. Okay. And I don't think we've seen the hoarders take place yet. Okay. So look, you can ignore it all you want. You can continue to hide your head in the sand, but these are real issues. And if you don't think so, wait, because they will become much bigger and deeper unless we do something to solve some of these problems. And at our current pace, there is not even a thought of solving them. Any thoughts, sir?
You said it perfectly. I mean, I tried to order my wife, I have to say at Lowe's, some Valentine's Day flowers today, and I had to go to like 10 websites.
I know.
And I have to get them delivered in 2 days instead of on the 14th because no one is offering delivery then. It's unbelievable. I've never had these problems before.
Right. Well, but I got plenty of white turtlenecks. I got loaded up the stock. And of course, the official call starts with the words of wisdom from Connie. And of course, patience is also a form of action. And it's funny, I used that this morning. A trade, being patient, not making a trade is the same as making a trade. We used to show a slide that said, it's always better to wish you were in a trade than to wish you were not.
Right.
And patience is certainly a form, and we expressly tell you to be patient and not rush and try to chase a market, especially the ones we highlight on top. But again, there is no reason to ever chase. What's the worst that happen? You miss a trade. So what?
That's right. And patience goes hand in hand with perseverance. And that goes to following a plan. And you have to persevere. And, you go through the ups and the downs. So patience and perseverance are the two things that work hand in hand. And most people who are successful will tell you that they owe it to that.
100%. And of course, the State of the Union, it's not about health. It's about government control. And is that not the truth? Can anybody dispute that this whole thing is about government control? Okay.
It's just like, listen, crypto, same thing. It's not about cryptos. It's about government control.
Right.
All about government control.
I mean, please dispute me if you disagree, but
you know what the problem is? I'll tell you what. Russia and China make no bones about it. The government wants to control, and they're right out there, and they tell you, we are controlling it. In the United States, it's like almost a mirage. It's like they go, oh no, it's a free country. It's like, it's almost what they hide. It's the same thing, but they don't want to mention it. They don't want to cite it.
Right.
I would love to see the Treasury Secretary or the head of the SEC come out and say, hey, the reason we don't like cryptos is because we want control of the money supply. That's what we want. We don't want to surrender that.
When are they going to do that?
That would be, by the way, at least that would be honest.
Right. Well, that you can never expect that.
But instead what you get is we're protecting the public.
All right.
Whenever someone, a higher authority, tells you they're protecting you, they're controlling you.
Exactly. And just remember, okay, I always can refer back to the simplest thing that almost everybody here can relate to. FINRA, government organization, okay, SEC, their restrictions of day trading are not to protect you. They're to protect the broker. Okay. So please don't think that any government agency is there to protect you. They're there to stick it up your ass and take the best advantage that they can out of it. Okay.
But Bubba, it sounds so good.
Yeah, I know. And I wait till you get to my pitch.
The public buys it and eats it up.
And well, that ties in with my bitch. And I've been bitching all day, but I got this one is, well, I'll put it this way. I'm not using Coke products ever again. Okay. Beijing Olympics, Coca-Cola quiet on Uyghur genocide after criticizing Georgia election law. Okay. Now, this is the same thing that happened during the BLM movement. Okay. When Hong Kong was getting invaded and taken over and going against what they were supposed to be getting. Okay. And everybody stood mute because of all the money they make in China. And here they open up their yaps like it was nothing. And now I'm running out of products because T-Mobile will be out, and now Coke is out, and all the products they make, and they make a lot of products. Okay, but this is what bothers me. Why aren't they speaking up about China? Well, because it's money. That's why. Okay, this is the problem. Okay, the same as the athletes and the actors in this country. Okay, it's always about the money. They don't give a shit about you. Excuse me. Okay, they care about money. And China, they make a fortune out of. In fact, movies take out lines that are offensive into China to customize them for the money. The athletes are the same thing. They're no better. Okay. But when it comes to something happening here, they're all hands on deck. And that's about money too. You have anything to say to that?
I would say perfectly. But the only thing I say is I know you prefer Pepsi. So thank God.
Well, thank God. But Coke makes a lot of products that I do use, but I won't be using them anymore. I'm telling you that. Okay. Anyways, so let's get back to the markets. And of course, the Dow, which we use the future Yankee Michael. Look, the Dow has been the strongest. Okay. It remained the strongest today, but it really didn't do much. It was you can kind of see it coming that it was going to be a non-eventful day. Although there was some wild action, it was really more of a non-eventful day. And here we are. Okay. Now we're long the Dow. I would say, 34.6 to 35.4. Now, I'd like to be a seller at 35.4, but right now I'm not selling. Okay, but in a day trade, again, remember, I'm looking at this on a long-term chart in which I'm carrying long-term positions. It has nothing to do with what I might be doing on a 4-minute chart. Okay, So in the meantime, 34.6 to 35.4. What, honey?
One thing I'll say here
Yeah.
is that, look, we follow trends, and we follow trends for an important reason. Because listen, while Bubba and I both, we're kind of waiting for this washout in the stock market, and we wouldn't be surprised to see it go down 10, 20, 30%, maybe even more. Inflation is such a thing that it erodes the value of money. So if the inflation goes up more and the stock market rallies, the stock market could be still losing and rallying at the same time if inflation is more. So that's why we're following trends here. It's a very cautious way of trading these markets.
Right. Exactly. And of course, the S&P, which again has been a little bit weaker than the Dow, which again, remember, in markets that are maybe turning or getting more bearish, okay, the S&P will be weaker because it's much stronger on the way up. And of course, we're long here, and I would say 44.40, okay, is some support to 45.80, okay. And again, to me, this has a look of a big move coming. This is not quite as simple as the gold and the copper and others, but this is again a market that is narrowing into a point which is going to be forced to make a directional move.
Right, but it is, the analogy we used in the pregame about how don't take technical signals from silver, take them from gold. It applies to the S&P 500 is the most representative stock market index there is out there.
100%.
And this is the one technically to watch. You don't watch the Russell, the Nasdaq, the Dow. They all are. They're all kind of idiosyncratic. The S&P is most. It's really the most representative. So it's the best technical view of the overall.
Well, that's what everybody compares their annual benchmark to. So,
exactly.
Yeah. No,
right.
So, in the meantime, again, 44.40 to 45.80, and of course the Nasdaq, which has been weak and continues to be weaker. Okay. Again, this is at a point. Again, we're long this, but to me, I'm not a big fan. Okay. I'm long because I'm supposed to be, but I'm not a huge fan. Okay. And I do believe that there's more likely a reversal coming at some point, but not yet. But again, this is 14,400 to 15,000. But this chart looks almost as bad as the next one you're going to see, which is the Russell. Now the Russell is still short. Okay. And should be. Just take a look at the chart. I mean, this is doing is building consolidation below majors of resistance anyways, which indicates it's probably going to break hard again to the downside, which fits in perfectly if you want a fundamental reason. Your government is forcing small business to suffer.
I was just going to say that. And we've been saying this for months, that the policies, really, the SEC, the regulatory policies, the government policies, everything really weighs on these small cap companies. Yeah, these are companies that have an average. I think the Russell 2000 have an average of like $1.5 billion market cap. The bottom line here is these companies are the ones that are really suffering from the labor shortage. And when you have to pay workers more, it's eating away at their profits. It's really hurting.
Boy, are you telling me?
Right.
McDonald's paying $17 an hour? Are you kidding me?
Right. So well, McDonald's is a big corporation.
I know, but there are a lot of them are franchisees that don't have it.
Exactly. But they're not in the Russell 2000. But these companies in the Russell 2000, the inflation and the higher wages is killing them. And that's why this is lagging big time.
Private Richie, I can offer you good luck, but I'm dramatically on the other side of that trade there, buddy boy.
Both of them?
What do you say?
Like
I don't play the total. I have a big play on the Rams. Okay. Anyways, Apple, Alpha Papa Lima. Okay. And of course, Apple, we are still long. And it's holding that 170 level pretty solid. Right now, it's like 170 to 176. And again, it didn't get punished with Facebook. It didn't get a huge rally with Amazon, as you saw the crazy earnings last week. It's just kind of stuck in a little bit of a range. And it's kind of, again, you'll see many stocks setting up in this very similar look that, again, will lead to much, they start winding tighter and tighter. They're going to make some moves. And right now, we'll see, we're long, so I'm assuming higher, but that could change.
It's so, isn't it ironic how last week you had totally conflicting signals from Meta and from Google? It's kind of sums up this market in total, doesn't it?
Yes, it does. It's a very confusing time, as they say. And AG, look, we're still short. We carry this in one portfolio. It had a nice little pop today, and here it is, right at resistance, 1050, 1060. So I would look at this at 11, okay, 950 to 11, which is what we said last week, okay. But again, the overall trend is still lower, and it looks almost identical, which it should, to silver, okay. So we have this really for when it's long. We don't expect to make a lot on the short side nor lose a lot on the short side. But when it does turn long and we do get a big move, we expect to make a ton on the rally, which is why we carry it in the first place.
Right. And what I love about this stock, what I love, not that I love it to own it, but what I love about trading it when you trade it from the long side is this stock, risk reward. The stock is not going to go to zero.
Right.
The stock could go to $40 in the right situation with silver if silver went crazy. So risk reward.
As soon as you start buying billions of ounces again, we'll see it go crazy.
If you wanna trade silver from the long side and you're involved in silver, this is a nice instrument to consider.
100%. That's why I like it. Okay. AMD Alpha Michael Delta, which we are long, and it did pop, right? We're short, and then we reversed along, and now you're looking at about 120 to 130. Okay. Now again, as you're seeing a very consistent pattern develop along everything. Okay. They're all kind of muscling in to a very tight range, and those ranges are going to break. Okay. And they could break higher. Look, just because I'm negative. Now remember, I'm long. The business I give you, the business I hold, but I am still negative. It doesn't make me not be negative about what's going on. And it does not make me believe that it cannot reverse. But I will tell you that the biggest rallies I showed you earlier come in bear markets, and you'll get plenty of time when it does reverse. You'll have plenty of time to get short if you're a short player, because the markets give you opportunity, because we don't go straight down. Okay. And nobody talks about the day after October 19th, 1987, when the market was up 400. Okay, nobody talks about that. You just talk about the down day the day before. In the meantime, 120 to 130. Bravo Alpha. Did they have earnings today, or they have it this week? I don't remember. Let me look real quick. I know it's coming. I don't know if it was or if it's still coming. So it'll make a difference on how I talk about it. Okay, it says 215, so they have not had earnings yet. Okay, BABA is in a very wide consolidation range. We're short. We're down at the bottom end of the range again. Again, I'm going to give you 110 to 130, but certainly, quite frankly, I'm going to look at it at 120 myself and see if I want to add to my already short position here. Okay, but it's 110 to 130, especially with earnings, especially with the question mark, because you don't know when they're exactly coming yet. Okay, but I will look at it at I'm not buying it at any price, but I will look at it to short add on at 120. Okay. Bito, which we still have not traded yet, because I'm still trying to figure out how it works. Again, there's the quotes in these ETFs for cryptos are not really solidified yet. In fact, it's hard to trade out months right now. And like in Bitcoin, you only can trade February right now. So, but what really depends on what makes these ETFs good or not is how they handle, if there is, and I don't know if there will be in Bitcoin, backwardation and contango. Okay, because that is the thing that typically ruins those ETFs, are the backwardation and contango, because they don't know how to handle them. In the meantime, this is at a nice explosion from the 22 to 27 level. Certainly 29 looks to be resistance. We don't track this anywhere. I don't have anywhere, but if I was looking at it raw, I would make it 26, which would fill the gap that it just made, and to 30. Okay. And then the Bitcoin soup. Okay. BitQ. Again, we said last week that it looked like it may be putting in a potential bottom. Okay, now we don't carry this either, but from my money, I do own this, and now I'm looking at this. I would say 15 looks like pretty solid support, and probably 18 is going to be resistance. Now again, we can go through 18. It really is going to depend on what the Bitcoin itself does. Okay, but this is certainly this chart almost looks like the Russell. Okay, so it's still pretty negative, even though it is making a little bit of a rise. But remember, if you're trading it or investing in it, if you're trading it, you know, a $4 rise is a pretty good move. Okay. So just remember what your objective is on the trade, the way you put it on in the first place. Okay. Anyways, 15 to 18, Connie. Chewy, Charlie Hotel, Whiskey, Yankee. Okay. And of course, we're long this now. And it's, again, developing a very nice move, a little bit like gold, Andy.
Yeah.
And I think the key here is it's probably 45, 44, 45, and then 52 is going to be the next big push of where it's got to get through. And again, the trend appears to be trying to change here. We've already changed, but it looks like, and it looks much better. It looks like you've got some pretty solid support. So anyways, we'll say 44 to 52, and coin, Charlie Oscar India November, looks just like BitQ, just a higher pricing. Okay, it's like 165 or so to 210. Okay, and this is going to be a key level, but overall, this also looks like a Russell. They look weak on a long-term basis, but they certainly could break out and change directions. And of course, we are still short this for the moment. Okay. Any thoughts here? I know you have a position.
I like this, as a crypto play. I don't buy cryptos,
right.
But I like this as the pick and shovel play. So I do own this, full disclosure, and
right.
added to it on the way down. I do like this stock for the long term.
I agree. This is the bookmaker. Jack Ma got brainwashed and he's wandering around somewhere in China.
News, the tennis player.
News today, 2023 IRS reporting by crypto firms not trading in news. Just that's fine. We knew that already. You have to. The difference is you've got to provide the 1099. They don't have to provide one to you. Anyways, Curl F, and again, I'm just going to run through this again. These are the pod stocks, which again, we believe that there's no hope that they're ever going to hold. That they're going to wait until the big guys get them. Okay, and then of course Draftkings. I said last week that it looked like it may be holding, and I think it did. And now I think we're holding at a little bit higher level. And look, it's not going to turn around overnight. It could be a takeover play, as Andy has said the last few weeks. But again, these things take time. Okay, they're not going to have a massive input of profit all of a sudden, because the business model is not for massive profits unless they get a massive handle, which means a lot more bettors. Now we're seeing a dramatic amount of more new bettors in the industry. What do you think?
Yes. And you got a big weekend coming up with the Super Bowl, and then you're going to go right in from there. You go right into March Madness, which is also big, and it'll be bigger this year because of, past 2 years has not been so big. So, it's been non-existent kind of. So I think, this stock has a chance, but as you always say, the acquisition costs are high. I'd say the lower it goes, the more chance someone comes in and buys this company. What's the market cap? 7, 8 billion, 9 billion?
Yeah, they're small. I mean, they're nothing.
Small company. It's a very easy takeout by a very big kind of consortium, Las Vegas Sands, MGM, any of these companies.
Right. And when Wynn just came out with their app in New York, and so.
And by the way, they might have, with all the money that Draftkings has paid to acquire clients, someone comes in and takes them out for 8 billion, they get the whole list.
Right. Exactly.
At a discount.
So in the meantime, we are short. Okay. And again, I would be looking at 22, 23 as a spot that maybe sell. Now I own this in my hedging account, and I'm short in the portfolio.
The one thing I would say, Bubba, about DraftKings is you saw what happened with Peloton on Friday, when you had a rumor of someone coming to take them out, and the stock popped, I don't know, 20% there in the after. You could see something similar with DraftKings.
Well, I mean, DraftKings is going to be in demand if there's an industry, a casino that wants an app,
Right, I'd much rather have DraftKings than Peloton. Let's put it this way. I
right.
like that business model a hell of a lot more than Peloton.
So, you could see a potential because again, if a casino wants to either add or get a better app, because DraftKings is one of the most popular apps there is.
Right.
See, again, right now we're shorted. That's what I can tell you. Facebook, we're short this too. That was nice little earnings for us.
Yeah, 26% in a day.
This looks brutal. Okay. This looks like it has no hope. And
You got a lot of stuff going on here. Listen, the U.S. government, Congress, they hate Mark Zuckerberg. They hate him.
right.
They'd love to put him to sleep. They'd love to break this company up. There's just so much stuff around. I was going to say a bad word. So much
I was gonna say.
around this company that it's dangerous. I was not surprised. I think that the move down was long overdue in this thing.
And I agree.
But having said that, they make piles of money in advertising. The question is, are the advertisers going to stick with them when the regulators start tightening the noose?
We don't cover fast in this call anymore, but would you like me to cover it for you, my brother? I'll do it for you later. Okay, I'll be happy to, but you're gonna get a report from me later of something to do. Caesars has an app too. Yeah, they do. Look, they're all gonna have apps. Okay, listen, Caesars is sold. I believe Mirage for sure sold their property on this trip. Did Caesars sell too? I don't remember.
I don't think so. I know Venetian did.
They're going into more of the app space anyways. Okay, that's the coming industry. All right, and you're seeing more and more blackjack dealers that are electronic. Okay, you're seeing more and more dice games that are electronic.
Really, they're going to go in. They will be in the metaverse, in casinos in the metaverse.
Exactly.
That's probably one of the most interesting applications for the metaverse.
Anyways, this is a short, and certainly if it gets back to 250, which who knows, I'd be selling it. Okay. Now again, it depends on how it gets back there. But if it popped up there tomorrow, I'd be selling. Okay. And we're already short. We're short from way up in here. Okay. There is no support right now. And then First Solar, Foxtrot, Sierra Lima, Romeo, we're still short this as well. And it continues to go lower. Again, this is.
We said when Build Back Better failed, this thing failed.
Without question. Without question.
It was actually failing going into it because there was all that stuff with Mansion, but it really started failing in like early November. And then when Christmas, look at what happened after Christmas, it just went straight downhill.
And right. And why would you want to own it? Right.
What's going to happen?
Okay. In the meantime, 68 could be some support. We're not a buyer at any price right now. And 72 would be a spot that I would look at to potentially sell, or maybe 76. Okay. Or add on. GDX, Golf Delta X-ray. And then we said last week, just all the other, it might have a little bit of a bounce there. Again, this is one more of a long trade. When gold turns to long, this is one you want to own. It'll give you some nice juice, not as nice as Nugget, which we'll get to, but again, it has lesser risk. And it's also a great hedger as well. But for those who want to be in the gold market without being in gold itself, this is not a bad play. What do you think, sir?
I agree. It's diversified. It's a lot of miners, and miners tend to outperform on the upside and underperform on the downside.
And we are still short, just full disclosure, right? And again, right now, I'd say 30 to 32. The ranges are getting wider because the trading ranges inside are getting wider. And of course, Goldman Sachs, Gulf Sierra, a little bit higher today. And we're short Goldman. Now, again, I don't know for how much longer. This has been a nice little move off the bottom. The banks are starting to pick up, with higher interest rates. Those are very beneficial to banks, especially with the Fed funds rate staying where it's at.
Oh, yeah.
I mean, their profit margins are gigantic right now. Okay. To me, it's probably got to fail. If it's going to fail, it's going to fail right here at about 370. And I would say probably 360 to 370 is the levels to watch right now. Okay. But we are short. IWM, India Whiskey Michael, which we're still short. Okay. And again, it looks off. It looks like a bunch of the stocks we looked at that were below, looks like Bitcoin. Okay. Again, looks horrible. And again, I think probably 200 is now, we're right there, but I think 200 is a sell spot. Okay. I think you're looking at 192 to 200, and I wouldn't be surprised to see it go to 180. and lower. Okay. Again, Andy mentioned these small companies are getting tortured by the policies, and they're not getting any better anytime soon. Okay. So just keep that in mind when you look into it. You'll find out, okay, that this is a very big problem. And Mara, okay, and we thought that it might have been finding a little bit of a bottom, and now we're back over that 25. 25 is still a key point to watch. Okay. I mean, it's either going back to 20. Colonel, which way are we going here, Colonel? I know you track it every day, and I know you told me yesterday when I talked to you, but I want to confirm that is still your opinion. Right now, you would be watching between really 20 and 30, because really you got to watch what it does at this 25 though. Okay, this has been a key point in it all along. So, but I'm going to get a report from somebody who actually trades it every day. Okay, but it does look better. But of course, you would expect it to look better because of Bitcoin. But you could also say maybe it was a little bit of a blow off top today too. There's a lot of things you could say. Okay, and of course, we do trade it, and we are shorted. Okay, Neo, November India Oscar, again, pathetic. We're still short, and it's just EVs, baby. It's just going lower. Okay, still selling rips. Okay, follows IWM more than Bitcoin. We'll change our mind if price action changes. There you go. That is directly from somebody who trades it every day actively. Okay. In the meantime, Neo looks horrible. Okay. Look, this ties right in. Most of the EVs look pretty bad anyways. The companies as well. So here I'd be looking at probably, 22 to 25. Okay. Nugget, November Uniform Golf Tango. Look at this. It's the same exact as gold. Now, the difference is if gold does take off, this will explode. Okay. And it will go up at a much faster pace than gold does. But remember, these are like big options that have lots of decay in them if they sit. Okay. And every day they sit in consolidation, they're losing value and opportunity.
That's right. And every day that gold fails and goes back down to 1800, this thing goes to a lower level.
Right. And remember that's important I'll look at any stocks after I'm done with my list. Okay. After I get Zoom, I'll look at anything you want me to look at. Okay. All right. So in the meantime, 44 to 50 for now. Okay. But again, if gold does turn, this could be a monster. Okay. But again, if gold continues to consolidate, okay, then you can't expect much of anything. Okay.
You can expect to lose money.
Well, that's for sure. Okay. And I just think you have to be very careful. Again, it's a great trade. Andy uses about 10 days. Okay.
Yeah,
it's a great trade. Go ahead. I'm sorry.
Yeah, I use about 2 weeks on these things. I mean, if I see something that I kind of like, I mean, listen, given what I think of gold right here, I think it could be turning. I think that it's got a shot, this wedge formation. I'd have a go with it, but the risk reward plan is in my head and on my desk before I buy it, and I stick to it religiously.
And I would expect that, again, it's stuck, but if it does take off, and again, we're still shorted. So we'll see. Again, we may not be short tomorrow, but right now we're still shorted. And NVIDIA, November Victor Delta Alpha, again, looks pretty awful when you look at the bigger picture. Okay. And of course, we're short this as well. Again, look, until it can show some consistency. Now, we thought last week maybe the chips are starting to bottom and they're, maybe the supply is starting to open up again, and maybe this will pop. But right now,
you mentioned that the rally from 1600 to 2300 in palladium could have been a sign that the chip shortage was ending, and the stocks have done better.
Right. I mean, I look at this from 240 to 260 right now. Again, you're seeing a tight range built, which would indicate even bigger movement coming. Okay. And Penn, Papa Echo November. And again, we thought maybe we're finding some support, and here we are. Now, again, we're still short. Okay. So it's not like we had a dramatic turnaround, but again, dramatic moves are usually moves that you fade almost immediately. Okay. What you're really looking for is you're looking to see if it can hold more consistency. And this could be again, the rally up and now the whole of consolidation could be a sign that it's going to get better. Very similar to DraftKings. It just looks a little bit better than DraftKings right now.
Yes, they tend to build cause over time. They build cause for a trend reversal. So
Correct. And the Qs, Quebec, which we are long. Look, again, I don't like them, but 352 to 364. Again, that's not too wide because I can guarantee you that the expectation of movement is bigger than that. And we're kind of in that churning and burning and waiting for a much bigger move. Okay. And I think that's what you're going to see. Pen, I did not give you, is right. You are correct, my darling. Well, let me give you Qs first, 352 to 364. And Pen, 45 to 50. 45 to 50. You are 100% correct. I am a jackass. Yes, thank you. Thank you for the compliment. Love you. Anyways, Riot. Okay, this is the interesting story of the year or the last 2 years. That it at one time was much higher than Mara. They're basically the same except in different states. And now Riot is just under Mara. And we thought last week 14 to 18, and that really hasn't changed. Okay, I mean, you might say 15 to 18 now. But if you get a big move in Bitcoin, Coin, Mara,
they're all going.
Right. Riot, they're all going to fly. Okay. Again, they're all reliant on the same piece of information, basically. Okay. In the meantime, 14 to 18. Okay. Roku continues on its path to zero. We are still shorted. And of course, Romeo Oscar Kilo uniform. Look, nothing has changed since last week. We're in a very tight range, which could be dangerous. It's 170, 140. Okay. Again, this is either making a bottom and which is going to pop, or it's going to collapse even further. That is the story to yet be told. Okay. We do not have the answer to that yet. We cannot tell from where it's at. We can only tell that the trend is down and now it's finding consolidation. Okay. So certainly it's on a smoother rate and it could still stand a little bit of rally and still be in a downtrend.
Yeah. Okay. I mean, look at what it did over the end of the year into the first days. It had the same kind of consolidation pattern, which basically built the cause for a lower price.
I mean, just look at it. It's just heading south.
Yeah, every consolidation is led lower. So, if you
we're going to assume the same.
Right.
And the SPY, Sierra Papa Yankee, which were long. And again, I'm going to give you the same and I gave you before. Look, we're stuck in this range. Okay, it's tight, it's tightening up. And this is only going to lead to a bigger move. And the bigger move could be either way. Okay. Hopefully for our sake, it'll be higher, but it could be either way. And I don't have the crystal ball, but I can see that we're about, if you look at the move high to low, you're probably somewhere in the mid range of the rally and the sell-off. So we'll see where it goes from here. But right now we are still long. And I would say that this is probably 440 to 460. Okay. Tilray, which we don't cover really anymore, but I just show it. This is just another pot stock. Is this bottoming or is it just going to collapse again? This goes into that deal with the government and trying to get the big guys to play. The Tango Quebec, which we no longer cover in our portfolios. Look, it doesn't look as good as the Qs. It looks pretty bad, actually. Okay. This looks pretty weak, even though it is just nothing but an ETF of the Qs. Okay. Tesla, again, EVs, it got down to our target of 800. Now we're back up, and I think the upside is probably 960 would be where I'd be looking for 800 and 960. The VXX, now this was interesting. With all the action today and all the selling pressure today, what did the VIX do? It went down. Okay. So again, that's telling you that there's still much complacency out there and not a lot of concern. And I think what you look at here is that we're still short. Okay. And it's headed lower. Okay. And look, again, this is one, just like AG, we really only have this in the portfolios. This is in all the portfolios for one reason, for when the volatility spikes. Okay. At these prices, you're never going to make a fortune on the downside because they just don't go down that fast, but you will kill it when they turn. And that's why they're here. because it could certainly easily go back to 30, 40, or 50 in a heartbeat if we get a big enough sell. What do you think?
Yes, and it's a spike index. It's not, if the market trickles lower, it's not gonna, it's not, it's this thing reflects big volatility, big spikes, and big downside volatility, not upside volatility. So,
And we also, I mean, we took a position on this on the Saturday call, and certainly if you'd made up an option position, I wouldn't mind being long here. I think that you've got a greater chance for a pop than a drop. Okay. But again, that's entirely up to you as to what you want to do. You'd be gambling a little bit, of course. That's why we don't recommend it. When Whiskey Yankee November, which we are still long, and look, it found some support, but really, what is it? It's 80 to 88. Okay. What do you want me to tell you? 88 to 90, 80 to 90.
no, it's dead money right now.
Right now is right, exactly right now. They just came out with their app and they're expanding, and it's supposed to be phenomenal, but they're not in Illinois yet, so I haven't seen it yet. But the casino business is expanding with unbelievable offers. Okay, there's a guy from Illinois that moved to Colorado and rented a B&B for 2 months to get all the offers that they're giving away, all the freebies are giving away, because it turns out to be big money if you're a big player. Anyways, we're long 80 to 90. Okay, XBI, okay, which we don't trade anymore, but it looks awful. I mean, a little bit of a pop, but this is probably 85 to 95. Okay, certainly I'd be looking to sell it if it gets up in here. Okay, and zoom. Okay, look, this is just like whatchamacallit. We don't trade it in the portfolio anymore, but it's still going down, and it looks just like Roku. Looks
Right,
awful.
they're all doing the same thing. They find a level, they consolidate, they build cores, and then they drop more. So, the trend is definitely lower here. And, if it continues, you're going to see it to a lower low after this period of consolidation ends. Now, can it turn around? Yeah. But in the meantime, if we want to capture the meat of the move, we want to stay short this.
Right. Something I'm going to look at Remix, REMX. Is that right?
The rare earth metals ETF.
Romeo Echo Michael X-ray.
That's the one thing I worry about with this thing.
Yeah, is this like the Mollies and those?
Yeah, it's the rare earth metals, the scandium and the all of those, that list of 17, rare earth metals that are in computers and iPhones and all technology.
Gotcha. I mean, it doesn't look very good. I mean, you can look at it in numerous and sundry ways.
See, I would love this. I would love this ETF if it had the actual metals in it. I think that the company, because China controls this market, they have Chinese companies in there. And I think that's what's weighing on this ETF. So I don't think I think that a lot of people get kind of blindsided into buying this kind of ETF because they don't really understand that there's other risks of mining companies in there.
Right. I agree. Okay. In the meantime, if I were trading this, which I don't, I'd be looking to sell it up here. Okay. Connie, here's the levels on Zoom. 140 to 160. Okay, 140 to 160. Okay. TSM, Tango Sierra Michael. Tango Sierra Michael. This looks familiar. Okay. It looks like a chopping nothing, going nowhere, big spike, big fallback, and kind of just sitting there.
Another one that I've been tying into my palladium theory here, along with kind of Intel and the other chip makers. And this is the biggest. They have 54% market share of the world's semiconductor market. So this is the 800-pound gorilla here. I would say that Palladium is saying that this could be worth a try on the long side. That's the only thing I would.
It looks okay. I mean, it certainly looks like it's trying to build some strength. I mean, again, you could look at, other than the big breakout here, it's really just back in this but it is working its way higher. I don't trade it, never have, but if I did and I wanted to buy it, I'd be looking for about 120.
Yeah, but again, there's political risk. Taiwan Semiconductor, if President Xi decides to go in there, you could walk in and that stock could be trading at $30.
Right.
So you got to be careful.
And Altria, that looks great. Philip Morris.
That always looks good.
I mean, not Philip Morris, but Altria. This looks great. And I did. Is their dividend really 7.25%?
They pay big dividends. The stock goes up. That's the best of every world here.
I love this. In fact, I recommended this on
This is,
on Liz Clayman's show. Okay, when I was looking for a safety.
yeah.
I own it, but I love it.
This is
Uh,
my favorite.
Now, November Oscar whiskey. This was like everything else. It's kind of in the middle of nowhere.
Right.
Okay. I mean, yeah, listen, $572.
High beta stock. That's a high beta stock.
You know, I mean, what would I do with this right now? I'd be looking at 600 to sell it, and maybe a 500 to buy it. Okay, that's how I would be looking at it. I don't get involved with these too often. They're very pricey to play. Okay, and there's better things I like to do, but certainly, I would say that based on what I'm looking at, there's a greater likelihood it breaks to the downside than it breaks to the upside. Okay, that's my view. 90 cents, which is, so what does that make it? So 90 cents of $50 is what? Okay, 8%, just under 8%.
1.8%. 1.8%.
1.8% over what
Is it
period?
90 cents a quarter or is it 90 cents a year?
Well, hold on, I'm just gonna put it up here because I remember seeing it was 7.25% a year.
Well, it's either 1.8% or it's 7.2% if it's 80 cents.
I think it's 7.2% because I think that's why I looked at it. That's what made me jump. Okay. 7.14.
Right. Okay. So it's $1.80 each quarter.
Yeah, that's what I thought. Okay. So in the meantime,
Take one more look. One more look. VLO. Victor Lima.
Valero, of course.
Got it right.
Valero, baby.
Yeah,
There you go.
that's my favorite.
There you go. And there's a beautiful breakout. Certainly you want to buy all the pullbacks in this thing. Okay, this is a great breakout.
And going with that, I mean, I asked you to call out for a reason. Going with that, I watched the crack spreads and they are hitting the grand slam because crack spreads are over $20. And that's the real time indicator of their earnings.
Hey, tell them what the crack spread is. Tell them what the crack and the crush are real quick.
The crack spread is the refining margin for turning petroleum into gasoline and distillate fuel. So companies like Valero, they say they're oil companies, they're going to go up with oil. That's not true. They have no exposure to the price of oil. They have no exposure to the price of the products. Their exposure is to the margin between the two. So when the crack spread goes up, they make lots of money. When the crack spread goes down, they lose money. The crack spreads have been going up. Now, the crush spread is like the crack spread, except it's in soybeans, where the soybean products, the meal and oil, are crushed from the raw soybeans. Companies like ADM and Bunge are like the Valeros of the crush spread in soybeans. Is that good enough?
Yeah, perfect. Okay. All right. So listen, again, the markets have been quiet. We're seeing some movement. As you know, we're predominantly long here. Not that I love it, but again, I'm not going to fight what I'm supposed to be doing. I always follow the rules 100%. Okay. But just be careful out there. ADM is doing very well. I mean, ADM is listen.
I think ADM just hit an all-time high.
There. I mean, they've survived everything, even price fixing. They've survived it all.
The company that's the supermarket to the world makes a lot of money when the things that people eat go up.
Right. Exactly right. So just be careful. Look, whatever you're doing, whatever you're trading, the biggest thing you can be here is patient, careful, and very disciplined in how you approach it. Okay. But make sure that you're not trying to find a reason to do something. Let the price action dictate to you what that is supposed to be, and you'll be much happier over time. Excuse me, Andy, have a great night. Thanks, man. I appreciate it. Thanks. Everybody, we'll see you either during the week.